What's up, Paradigm Day Trading Group? How are you guys doing today? Thank you very much for joining us on this episode where we are talking about technical analysis. We're talking about a couple of stocks on our weekly watch list, and of course, the infamous AMC short squeeze. Guys, stay tuned. I know you're going to want to listen to this episode, but if you haven't already, go ahead and hit the like button, hit the subscribe button, and also join our absolutely free Discord. It doesn't cost you a single penny to join. We have some alerts. We have some solid day traders in there, and I know you will absolutely love it. We're about 500 members strong, and we keep on moving on. Alrighty, guys. So first things first, I want to go over the stocks that we are looking at. We're going to jump straight into it. I know you're ready for it. First things first, let me go ahead and turn this on. AAPL. We have Apple. Apple is our stock pick of the week. Of course, we do have a couple of others, but I really want to focus in on Apple here because Apple is bound. It's ready. It's ready for a move, and I know we are going to catch this one all day long. So let me go ahead and exit this right here. Take some of this off. I'm just doing a little due diligence for myself. And boom. Okay. So as we can see here now, I get asked all the time, how do you trade, Mark? I really want to learn how you specifically trade because it seems like I'm jumping in too late on these calls and I'm losing a little bit of money, and I just want to know how you specifically trade. So let's look at that real quick. So what I like to use my EMAs. EMAs are very, very important, especially to me whenever I'm trading, because what they are is exponential moving averages. They kind of give me an idea of where the stock is going to go. Because most stocks trade technically. And the reason why I say that is because you got to think about it like this. The big market movers in the game, I'm talking about your big hedge funders, and so forth. These guys aren't in front of computers all day trying to make the trade, right? They have stock bots or bots that or algorithms that allow them to trade very technically without any type of emotion. And for that reason, we need to do the exact same thing. We have to fight fire with fire on this in order to play correctly. So what I typically look at, and I'm going to go ahead and zoom into a 5-minute chart because a 5-minute chart is my basis for almost everything. As a day trader, okay, if you're not a day trader, this is the video to watch. But if you as a day trader, I typically like to watch the 5-minute chart. Now, mind you, my EMAs, my exponential moving averages, you'll see here on my chart, they are the red line, the blue line, and the green line. The red is a 20-day moving average, the blue is a 50-day moving average, and my green line is my 200-day moving average. Now, the difference between what we see here on TradingView right now and what actually is going on is this is, as you can see, we're on a 5-minute chart, but my EMAs are based on a 15-minute chart. This allows me to get a broader understanding of what's going on in the market, okay, without having to toggle back and forth from screen to screen. Okay, very, very important there. So as we can see here, we have, again, our 20, our 50, and our 200. And what I like to look for, these lines or these EMAs to be very close to each other before I make a play. And let me explain here. So as you can see, we can typically determine how a stock is going to perform right in pre-market hours. So, I'm not talking about at 3 o'clock in the morning if you are in Central Standard Time, which I am. But what I'm talking about is about maybe 2 hours before the market opens. We can get a solid determination of where the stock is going to go. And as we can see here on this specific day, this is June 4th, our EMAs tightened up together, right? We had a crossover. Typically when the red crosses above, when it crosses over our blue line, this is indicating to me that we're going to have a solid push in a direction, okay? Now, when my EMAs are all underneath my candlesticks, as you can see here, this also tells me that we are in a bullish trajectory and that I should be looking for some type of call position, some type of long position, if you understand what that means. We got longs, we're betting for the market to go up, and we got shorts that are betting for the market to go down, okay? So in this case, we're looking for a long position. Sure enough, we get that confirmation with the cross. We get our candles above our EMAs, at least 2 of them, and then right at open, we do get a nice cross over our 200 line, which is solid, and sure enough, we go to the moon on this day. Now, the cool thing about this is that you can do this time and time and time again with multiple stocks. It does not just have to be on Apple, and I'll show you that here in a little bit. But let's take another look at another day that okay, so check this one out. So this one was a little choppy, but ultimately all the EMAs are pretty close together, and of course we do have this push up. Now again, we're looking at a 5-minute chart, so I know it doesn't look like a lot is happening here. It looks like a lot of sideways movement ultimately. However, this is good momentum upwards. Not only do we have this stock is on my weekly watch list for a reason, okay? As you can see, there's also a white line, okay? Now, my white line is my 4-hour EMA. Again, we're using multi-time frame views, okay? I want to see where the stock is going to go. And sure enough, we do have a 4-hour 200 EMA that's on my list, and my candles have crossed. Now, what happens when that happens? What happens when my candles cross a 200 EMA on a 4-hour chart? Well, this tells me long-term bullish, guys. Long-term bullish. Now, not only do I have confirmation of the cross, now, if you're looking at this chart, you say, well, Mark, you got to be kidding me, man, because Apple crossed over once before and came straight down. Crossed over again, came straight down. Crossed over again and again and again, came straight down. Crossed over again, came straight down. So you're asking me, well, Mark, you're saying that there's a cross, but theoretically the stock can come down. You're absolutely correct. The stock can reject. If there's some type of news, some bad news, the stock can come down in the downward trajectory, and we can continue to go down, you know. Let's take a look at a long-term trend, and let me explain to you why I believe that we are going in an upward trajectory, okay? Again, we're looking at on this chart. This is a 4-hour chart, okay? Apple has or typically likes to trade in these parameters here. Check this out. We got a lot of support right here. There's some resistance right up here, but we're right in the middle, okay? And of course, as you can see, there is also some support here, which we are breaking, okay? We're breaking that support. Now, Apple is not a stock that's going to continue to go down, okay? Of course, we did have some downward momentum, and the downward trend, it was about a 30-day downward trend. But the thing that I'm seeing here, I really want you to pay attention to this. You know, let's see here. Let me zoom in. All right, so yes, the candles did cross over before, but what we're not seeing is this cross. So when a 20 EMA crosses over a 200 EMA, we get some movement, guys. Over here, this didn't happen. The 20 EMA was pretty far from that 200 EMA. So this, of course, we're not ready yet. We're not ready yet. We still have some consolidation to do. And sure enough, we get that consolidation. And not only that, but we get that nice cross back underneath, pushing all of these in the upward trajectory. Look at that. Nice upward trajectory. We crossed over, we bounced off the 20 line, and of course, I strongly believe that we are going to be in an upward trajectory, okay? We didn't have that before. Look at that. It never crossed over, but now, if you can zoom in, if you can see, we have confirmation and we have the cross right there, guys. So my call position stands, okay? Let me tell you where my position is and where I want you to be looking for on this weekly watch list. I have an Apple call it's a 1:30 call expiring the 18th of this week, so it's going to be June 18th at 35 cents per contract is where I entered my position, okay? So this is what I'm looking at. I hope you guys hop in on this one because I think it'll be a nice solid run for at least 2 to 3 days, and that's how long I plan on keeping this position. The next one that I want to look at is going to be Rocket Mortgage. RKT is a ticker. All right, so we're looking at Rocket Mortgage here. Let's see. So Some can argue this one. Okay, guys, I use the same technical analysis on every single ticker, every single trade, but some might argue this one here. Say, Mark, it's already ran up. As you can see here, it already ran up. You know, we lost that train there, you know. Okay, we have to look back. Let's see. Let's pull back this curtain here. Let's take a couple steps back. What typically happens on a trade, and I can show you, I know you see it, guys. We got a nice cup and handle. We got a nice cup and handle that formed right here. There's a good possibility that these candles can bounce off this 200 line. But watch what happened when it did cross. We had a nice cross, and we had a solid 2 days of strong momentum in the upward trajectory. Now, typically what happens, as we saw on this very first push upwards, right? Very big push, and then it came back down to consolidate. Very big push, came back down to consolidate. Very big push, came back down to consolidate. So I think it's in this general area, because we have some support here. We have these candles bouncing off this general area. I do feel like we will have a nice push up to about a $22 range, give or take. That's what I'm looking at right here. Now, if we don't do that, I really strongly believe that we are going to bounce off this 200 line and then push up. But ultimately, we are still pushing up, and I think that if you buy a little bit of time on there, we can get the momentum that we're looking for. Now, again, pay attention to this cup and handle, because if you aren't aware of what cup and handles indicate, they indicate a reversal, okay? So we had a strong push down, and I want to show you that real quick. We had a strong push down at the very open of this, the beginning of this cup and handle formation, and then big tank. So I know Rocket Mortgage, with everything that's going on right now, I really believe they're in a solid state, and even their earnings report showed as good, if I'm not mistaken. Let me see. Let's see. Okay, estimate. Actually, look, no, they were actually a little further down than where they were supposed to be, but nonetheless, it's still good earnings in my book. But as you see here, look at what happens every single time. Big drop off, comes right back up. Big drop off, comes right back up, and same thing keeps happening. The difference is that we had that cross. Okay, not only do we have the cross, of course, we do have the pattern right here, which is the cup and handle formation, okay? So I believe it's going to go up. I have a call position right now at 20. It's a $22 call, expiring on the 18th at 24 cents per contract. So keep an eye on that one, okay? The next one that we have right here, very, very important, is Zoom, ZM, okay? Zoom video. Again, we see the same type of pattern forming. As you can see, guys, we have my 200 line on a 4-hour chart, okay? We're looking at a 4-hour chart. We have confirmation with our EMAs that crossed over each other. I believe that it might retrace back down. However, pay attention. We do also have a gap that, let's see. No, there is no gap. No gap there, but I think that we can hit new highs because we don't have any type of rejection here. So I think we can hit right around the 380 range, if I'm not mistaken, 390 range, sorry. And my current call position is a 390 call expiring on the 18th at 1.95 per contract. So pay attention to that one, guys. I think my exit will probably be around 380. That is what I'm looking for. That is what I think will help us out and get us into that winning position there. The next one right here is my last one. Okay, very, very important. A good one, I think. ARC. Guys, if you're not following this ETF, you can make a lot of money on this ETF. As we see here, again, the same type of trajectory, the same type of movement. Now, again, the reason why I think that this is going to move in the upward trajectory is the fact that we did get this crossover. However, watch what happened here. We did have a crossover here, but we never had a cross on the EMAs. We never had a cross. We got so close right here to having that cross, and it didn't happen. But I do think, based on this movement, we will have that move that we're looking for. I'm looking for a $122 call, if I'm not mistaken. I'm sorry, $120 call, expiring on the 18th at 52 cents per share. My guess right here, guys, is that we are going to get this cross from our EMAs and push to new highs. I wouldn't say new highs, but we will push to higher than where we have been. ARC took a pretty big beating right now. So, some can argue this, some can say that this might not be the best scenario here, but I think that this is a good time to buy in if you haven't already. Okay. So very, very important, guys. We got 4 tickers. We got Apple, we got Rocket Mortgage, we got Zoom, and of course we have the ETF, which is ARC. Okay. All of them expiring on the 18th, and all of them that are worth playing in this game right here. Always remember to diversify. You don't want to throw all your eggs in one basket and then completely get hammered in the end. So I do recommend you diversify there, okay? Other than that, guys, we have one more stock that I want to talk about. I did say that we were going to talk about this, and that is AMC. AMC. There's a lot of stuff going on in AMC, guys, but I want to let you know, if you have been following me from the very beginning when I told you guys to jump in at $3.98 per share or $2.98 per share, we had a massive run, okay? Massive run that went to about $25, $26 a share, and we all made a lot of money on that position. We then got stomped out because Robinhood and other brokerages decided that they were going to stop trading or not allow people to buy in, which really hindered performance on AMC. So after all that happened, after the smoke settled, everything cleared out, we had some massive consolidation that went on for about 3 months. And then I told you guys, now's the time. Now's the time to go ahead and jump on in at $10 a share. I think it's going to go up. And sure enough, guys, based on this this triangle here, we had it. We had the move that went all the way up to $71 a share, if not higher. And now we have some consolidation once again. Now, I will say on Friday, we did have a breakout. Again, this is all technical analysis. We're not going to get into any type of fundamentals or talk about the shorts. I know you guys have been listening about or hearing about shorts for the past month now. But again, just technical analysis here. We did have a breakout. There was a couple times where I did think that this triangle was actually formed right here, and then we had the breakout to the downside, which would have made sense if we were following the wicks here. However, sometimes you just got to have a little bit of patience, and we see here that the actual wicks were still in play. Okay, with the triangle was still in play, and sure enough, we did have the breakout right there. Very important on this one, guys. Let's be realistic. I get a lot of people that are asking me, Mark, is AMC going to $5,000 a share, $1,000 a share? There is absolutely a possibility for that. Absolutely, without a doubt in my mind. Here's the thing. Will it happen? Technically, it should. Okay? Technically, it should. But at the end of the day, if it does happen, these brokerages understand that this is a black swan right here. This is the needle in the haystack. This is very special. This is a very special stock right here, because if it does happen, if the squeeze happens and it goes to $1,000 a share, $2,000 a share, the brokerages are required to get the shares, get the capital, so that way they can actually sell out of that position, and help. I wouldn't say help the hedge funders, but eventually, if the ultimate squeeze happens, it's going to be nuts, because there is a possibility that this stock can go to $5,000 a share. Just using technical analysis here and going based off the short interest and going based on the fact that the retail investors, us as retail investors, we own the stock. We own it. Okay. And if they cover, guys, you talk about a gamma squeeze that you've never seen, and it will be crazy. It will be crazy, guys. So is it a possibility? Yes. But in order for this to happen, we need to pass big milestones, $100 a share, $200 a share. And realistically, I don't think that will happen next week. Okay. I think that if we do have a strong push in the upward direction to about $65 a share right at the gate, maybe $70 a share, we do have a possibility of going to new heights. But with these short hedge fund investors. They are going to make it tough, guys. It's not going to be easy. So keep an eye on it. It is on my watch list. I do have plays currently that I got early on, and they're still in the green. They are still profiting, but just be aware of that, guys. If you are buying contracts, understand that these contracts are very expensive, and I do recommend buying time. Be sure you buy time. If you do not buy time, you're going to screw yourself in the end. And I mean, because chances are the squeeze is not going to happen next week. Okay, stay tuned. We have a lot more videos that are coming out. If you haven't had a chance to hit that like button, go ahead and hit the like button, hit the subscribe button, and don't forget to join our Discord, where we have a ton of traders in there that know a thing or two about trading, are all here to help each other, and it's absolutely free. So until next time, guys, thank you very much for joining this episode of the South Texas Day Trader, or the Paradigm Day Trading Group.